Hey everybody, it's Christmas Eve. Market's about to close in about 55 minutes, and I thought I'd just give you a quick little update and a longer thank you. Maybe I'm going to try to keep it short. Let's see if I can keep it short. We have a good market today. The MicroStrategy is at 360. It's up 27.65 right now, and you can see Tesla. And so you can see Tesla there is right now at 452.39, and that is up $21 for the day. So it's a great day. I'm thrilled. The market's up. The two stocks that I'm in are up, and I'm in this IRA. It used to be at Schwab, and now it's Thinkorswim, which is owned by Schwab. But I'm going to kind of show you what's going on with the IRA and show you that. And by the way, let me just tell you a quick story about the IRA. So this is an IRA that I have a bunch of different accounts, right? But this one is kind of the pure one because I was challenged. People are like, Mark, you can't be making that kind of money, trading, doing covered calls. And I was like, oh, really? And I've had all these different accounts and I do it all over the place, but I never had anything purely devoted just to covered calls. It'd just be something that I would do in conjunction with all the other stuff that I had. And I decided, you know what? Screw you, man. And I'm gonna open up this IRA, which only had Twitter in it at the time when Twitter was trading. And in 2020, in April of 2020, it started with $111,000, and within 23 months, it was at 758,000. So it went from 111,000 to 758,000. Right now, it went back down. Okay, because Tesla went down for a couple of years, and I just kept at it, kept doing it, kept at it, kept doing it, and now Tesla's back up at record highs, close to them anyway. And so is the account. The account this morning was at $764,000. And so if you had asked me in April of 2020, hey, Mark, in 4.5 years, your account's going to be worth $758,000, but it's going to have a lot of volatility. It's going to go up. It's going to go down. It's going to go all the way to 758. It's going to come all the way back into the hundreds again. It's going to go back up to 760. Would you take that? I think you know the answer, and I know the answer. The answer is yes. Okay. Unfortunately, we don't have a crystal ball to know that that's going to happen. So you have to believe in your system, and you have to trust in a process, a proven process. And so that's what I did. And so I've got this account. I put it on my website. I need to update it now. It's probably going to be at $1 million, I think, in the next 3 or 4 months. Let's see. Maybe I'm being optimistic as usual. But let me show you what's going on. I've got 2 positions in this. And by the way, when I started this in April, it was in Netflix for 3.5 months. And then in August of 2020, I went to Tesla. Okay. And I stayed in Tesla for I've been in Tesla for the whole time, except now I've added some MicroStrategy and a couple other things to the account. And so now it's really performing really well again. But it helps when the stocks that you have are doing well and they have a lot of juice. So let's just take a quick look on the screen. And I want you to kind of get a way of the way I'm thinking today. Okay. So we've got the market up $27.83 on MicroStrategy, right? And so the market is showing that MicroStrategy is at $360. I've got the 330s sold against these 175 calls. So this sounds weird, okay? I buy these $175 calls. These are synthetics. I got 800 shares or 8 contracts, okay? They have basically 6 months left to run on them. And I did roll them yesterday, by the way. So I'm in them at 192. They're worth 207, okay? So it shows that I'm up a little bit on the position, but I've also got an accrued position that I liquidated yesterday of the 250s just to improve my delta on this. Okay. And so I'm trying to improve this 90 delta, which is what I had yesterday. Today it's gone up to 91. I want to improve that position. So I took my juice and I improved that position. That's part of my strategy is when things go down and I think they're kind of near a bottom, I force myself and force feed a bottom position to add to my bottom position. Okay, you get that. Then what I do is I forget about it. Okay, don't be concerned about this line. I know it sounds crazy. Don't be concerned about this line. What if it goes down below 175? Well, stock's like $200 higher than that now, right? So I'm not so worried about it. I don't really care about what happens if the stock goes down and up because I've got these deep in the money calls. I don't think MicroStrategy is going out of business, and I don't think it's going down to 175, and I don't think it's doing it in one day. And if it does go down to 175, I'm going to roll them lower. But I'm going to collect the juice all the way down until it does that. But right now, the juice is good. So I use this base position. Get your brain around this if you want. I use the base position to collect the juice. So now we focus on this line. I've got the 330s, and I've got 7 of those sold against these 800 contracts, 700 contracts sold against the 800. And that's what's called an asymmetric position. So I've got 800 long, but 700 shares short against it. And there's a reason for that, but I'm not going to go into it. It's not a big deal. Okay. And so I got 20.45 on these when I traded them. It was right at the money when I traded them. So it was all juice. Okay. There's a video on it. By the way, if you want to see how this whole trade has progressed, go back to November 20th and watch the, I think it's called it's the whole MicroStrategy playlist, but it starts with MSTR critical alert. I think that's what it's called on the 20th of November. Here we are on the 24th of December. Okay. So you can see that the market price of this has gone up to 31. Why? Because it's in the money, right? By a huge amount. The stock is at $59 and it's at $3.59. It's basically $30 in the money, and there's only $1.87 left of juice. So I probably could buy these back, and I would have collected the difference between $20.45 and $1.93 and pocketed all that juice. But you know what? I like the cushion that I have if the stock drops back, the next day when we have a market open on Thursday. All right. So I'm not going to rush to roll these up just yet. Now that might be a mistake, but why not? Because I could take my juice and go out to next week. But if this opens down, then I want to have a cushion. It could go all the way down to 330 and I won't really lose much money, right? That's all my cushion. I won't make much money if it goes any higher either. That's the way covered calls work. But you can see that the stock is up $28, okay? And those of you who say that you're losing money on your base position, Mark, well, look at this. I'm making $19,000 today on the base position, and I'm down $13,000 on the short position. That doesn't look like I'm losing money to me. That looks like I'm up about $6,618.33. And it's up over my strike. And so I want to just nip something in the bud here. But aren't you going to get your 175 strike price calls taken away from you when this expires in the money? A, I'm not going to let it expire in the money. I'm going to roll it to next week or 2 weeks or whatever. B, your brokerage firm, what they do is they don't exercise your base position. They exercise your expiring calls. So what they're going to do is they're going to buy you in. Actually, you're going to have assignment in your account because they're going to exercise you, and you're going to have, in my case, if I let them expire, I'm going to have 700 shares short of MicroStrategy. The brokerage firm doesn't worry about that too much because I've got this long position that goes against it, and so they're not happy about it, but they're like, okay, get that cleaned up. So you have to go in, you buy back your calls, you clean those up, and you go out and sell the juice for the next week. Okay. So that's how that works. So don't be worried about me, I'm in the money and I'm going to get exercise because it rarely happens. Think about it. You can turn around and sell your call that you bought for $32.27 per share, basically, right? And you sell your call, or you're going to go exercise it at $175 and spend $175 and then exercise. Like, it doesn't make any sense. You're going to be it's the same thing. You're just going to go out and exercise your call. Okay. All right. Now let me go a little quicker. All right. Here's Tesla. You can see Tesla's up $22.30. I've got two positions sold against 4,500 shares of the 320s. Okay. Which are expiring here. And they got a nice 89 delta. So I'm pretty comfortable with those. But I've got a 30 contract position of the 450s, and it's at 452. So right at the money. That's why there's still a little bit of extrinsic value, $7 of extrinsic value per contract, or per share, I should say. And we've got the 435s. Now those are way in the money by what? 20 bucks, almost 20 bucks, $17. So they're way in the money, and there's only $2.65. When something goes way in the money, all the juice comes out of it, right? So these that are at the money have still a lot of juice, and these have almost no juice left, $262 a contract. So let's go over here and say, all right, well, Mark, you're up $84,000 on your base position today. You're down $35,000 on your two short positions today. So today you're up $47,677. Okay. So that's how, and I know this blows a lot of people's brains, but that's how a lot of people, they're like, how can you be making money? You're over your strike price. I'm making money because the juice is getting squeezed out of it. We're almost at the end of the week. We only have a couple of days left trading. And so the juice gets squeezed out of it. And so then you're like, well, why aren't you rolling higher? Well, first of all, I have a rule. I don't like to roll up in a red market, at least in this trading plan right now. And the reason is because now I have all this cushion, right? So on the 450s, I only have $2.65 a cushion, but on the 435s, I've got $17.70 of cushion, right? So if the stock drops 1770 on Thursday morning after Christmas, then I'm going to be like, oh, cool. I won't lose money until it goes down below 435 on these contracts, right? These 450s, I will, right? It's got to go as soon as it starts going below 450, I start to lose dollar for dollar. So I'm not going to give up that cushion to roll out. I'd rather keep the cushion in a red market, right? Because the propensity is people are selling in a red market. And so we do have a red market going on right now. So I respect that. It's part of my trading plan. So I just wanted you to kind of see the mentality. This, I always say, the way you have to think about this is you take your brain out of your brain, you go turn it upside down a few times, you wash it, you put it back in, and then maybe you understand what the heck I'm doing. Because it's a convoluted way of thinking. We've never been trained in thinking this way. We've always been trained in buying low and selling high. We've always been trained in buying a stock and selling a covered call out of the money against it, making a little bit of extra money. But we've never thought about at the money or in the money, which is what I'm in right now, as you see on the screen. Every position is in the money. We've never been trained in how does that work? Well, if you focus on the juice will set you free, right? The juice is the extrinsic value. This column right here, right? The 217, the 249, the 707, which when I traded these, they were a lot higher. So we sold higher, we're buying lower. It's just a new way of thinking about it. So listen, we're getting ready to go into Christmas tomorrow. I'm going to shut this down in a second, but I want to just say Merry Christmas to you, Happy Hanukkah to you, Happy Festivus, whatever it is for the rest of us. I'm grateful for you being here. I sure enjoy a lot of the comments that you guys make, even the ones that you're confused that are like crazy, you don't know what's going on. I still appreciate your trying to learn. As long as you're trying to learn, I'm going to try to help you. And that's my goal. Is I'm just trying to, one person at a time, get this message out that there's a different way to make money than give your money to a broker and have him go, we're going to put you in a nice little portfolio of stocks, bonds, and mutual funds and gold and whatever, and you're going to get 10% or 8% a year. You can see that shooting for 2 to 4% a month is the way to go. We're getting a lot more than that when you use synthetics, but the bottom line is the strategy is still the same. And so, going into 2025, you have to decide what you want for your own trading, right? I highly recommend that you get a system, right? It doesn't have to be from me, but it can be. I'd love to help you. But if not, get a system. And the system needs to have a few things in it. It has to have good risk management. It has to have good mindset, capability to address your mindset, right? Because mindset is 90% of what's going on in trading. You have a system, a proven system. You have to have a proven system that you build with a lot of tools, and you have a strategy that you stick to. And so wherever you go to get your knowledge, great. It's better to be educated than uneducated when it comes to your money. And we've never been trained in this stuff, guys. And so you've got to get yourself some training if you're serious about this. If you're not, watch a video from a bald guy or guys with hair on the internet and do what they do. But please don't follow what I do. You're not me and I'm not you. And I have a totally different experience profile, risk profile. I have a big muscle when it comes to ups and downs in the market. I've made a lot of money. I've lost some money, a lot of money too. I'll be frank with you, and it goes both ways. But I can handle it because I've got the experience. If you're just starting and all of a sudden you're jumping in doing these trades that you don't know what to do when things go against you, please don't. Please don't. I don't want to see you losing your money. I don't want to hear about you losing your money. I don't want you to lose money, right? I want you to make money. And I want you to start small if you're learning this process. But there's a lot more to this process than buying a stock and selling a call against it, as you see. This is, 18, 19, 20 videos now going into my thought process on one of the most exciting and fun stocks that we've been around in a long time. But you can see, while we've been in it, this stock has moved about 230 or 240 points. This is not IBM and Coca-Cola, right? This is something that moves around. So let me summarize by saying I'm grateful for you. Thank you for your support of the channel. Thank you for your support. If you're one of my students or my mastermind member, I couldn't imagine things without you. I appreciate you being here. Those of you that are commenting and supporting the channel, thank you so much for being here. Go out, spread some love and good cheer, and have a wonderful holiday season. Tell the people you love that you really love them, and give them an extra long hug too. And just really enjoy who you're around and the laughter and things. Because the money, that's fine, but it's not as important as the people in your life. Merry Christmas to you. Happy holidays, and I'll see you on the next video. Take care.